Hi everyone, it is Tuesday morning and we're going to go over the ending diagonal that we've been talking about ever since January of this year. New members, new subscribers, a lot of traders we talk to get kind of confused about this. We're confused too because it's, as we've been saying, this is the largest ending diagonal that we've ever experienced going back 150 years. This is at the intermediate degree, which can last months and even into a couple of years, which is what this is. And we've traded a lot of them at the hour, minute degree, hundreds, but we've never seen one at the intermediate degree. So it's pretty challenging, but it's also exciting. So anyway, hopefully this video will help everybody to get a handle on how we think this is what's happening. So first of all, we've drawn a little diagram right here to start with. If we were doing a Elliott Wave workshop like we used to do, we would draw this on the board, and an ending diagonal has 5 waves: 1, 2, 3, 4, and 5. And each of these waves are made up of 3 waves. 3 waves, commonly called ABCs. And this distinguishes it from an impulse wave. So an impulse wave has 5 waves also, but there's 5 waves within each of the waves except the 2 corrective waves. Wave 2 would be 3 waves, 3 would be 5 waves, 4 would be 3 waves, and 5 would be 5 waves. That's an impulse wave. Wave 4 can't break the top of wave 1 in an impulse wave. But in the ending diagonal, the distinguishing characteristics are that each wave is made up of 3 waves, and 4 breaks the top of 1. So it would be really nice if human psychology could produce a chart pattern that looked like this stick figure, but they can't. And so we have to try to figure out on the chart, real-time chart, where these waves are that fit with this diagram. And this is how we do it so far. So we go back to the last October was the largest correction we've had since 2011, and we labeled it as wave 4, starting right here, and this is where the diagonal starts. And the diagonal is working its way through intermediate wave 5, which will be the final top of the 6-year-long rally. And there's 5 minor degree waves within the intermediate degree. So we have minor degree wave 1, minor degree wave 2, minor 3, minor 4, and minor 5. And going back in reference, let's see if we can make this program work. This is a pretty neat feature if it will work. We have 6 23-inch screens in front of us, so I think we can pan over to show where intermediate wave 4 is in the big picture on the larger degree. So we have primary degree wave B in 2011, and then we're working through primary degree wave C. We have 5 intermediate waves, 1 and 2. Then there's 5 minor waves of intermediate 3, intermediate 4, and this is where the diagonal starts from on the long-term chart, big picture, and this is where it works through, and this is where we are now. And we're also going to do a video explaining, going back to the 2009 low and how we work through where we are currently later this week. But for now, we come back over here to the diagonal. So we count 3 waves of wave 1, wave A, wave B, and wave C. And minor degree is subdivided at the minute degree, which is the green letters in the brackets. This is both of the December highs last year. And then we started a three-wave correction, A, B, C, for minor wave 2. And so this is how the diagram, this is the same thing as the diagram, but this is in real time. This is what this would look like. Now, if this was going to be an impulse wave, which is at the time we weren't sure that it wasn't, this would have been wave 1. We would have done a wave 2 correction, and then wave 3 would have started and gone way above 2200 in an impulse fashion, and we'd be trading at 22, 2250, 2300 today. But that's not what happened. From the wave 2 low here, the market rallied, made a new high, and then we went into a sideways correction, and then made another nominal new high again, just to tag the channel line. And this is, all of this is where we were alerted to the fact that we were probably doing wave 5 was turning into an ending diagonal. And fifth waves are either an impulse wave or an ending diagonal. So they're either one of the two. A fifth wave isn't 3 waves, or it's not anything else. It's either 5 impulsive waves or 5 waves of an ending diagonal. So from the wave A here, we did an ABC, and we labeled that as W. Then we did an ABC, we labeled that as X, and ABC as Y. And the reason they're labeled as X, W, X, and Y is just simply to show a W means that it's an ABC. The X means that it was subdivided by another ABC, and then another ABC, which is Y. So this, what this does is creates a double ABC pattern, which is a flat. And this forms minute wave B of 3, and then we do wave C to a new high to create 3 waves of wave 3. And it is possible that this would have been wave 5. It's possible that this was 3, wave 4 was in here somewhere, and this was wave 5 of the ending diagonal. However, what's taken place since then is not bearish. This is not an impulse reversal off of this high. So we assume that we still have 3 waves up of wave 5 left to go, which is how we're trading it and how we have this chart labeled. So after the third wave high, we did an ABC down. We labeled that as minor wave 4. And then we did A up, and we did an ABC down for wave B, and now we've started the last and final wave C to complete the 3 waves of minor wave 5. Now there's a few alternates here. Wave 4, it's very possible that wave 4 ended right here at this low last week. And how that would count is it would be ABC down, and then we did a triangle formation to this point right here for wave B. So we'd have wave A here, wave B here, and this is wave C to end wave 4 right here. And that's an alternate. That's our second alternate, is that wave 4 ends at this low. This means that this rally right here is just all of our part of wave A so far, and then B down, and then C up. The third alternate is that we're doing a huge triangle right here, and triangle patterns, contracting triangles, are reserved for fourth wave positions, and it doesn't matter whether it's the fourth wave of an impulse wave or the fourth wave of a diagonal. You can still have a triangle, and it would be eventually labeled as A, B, C. We're in D now, and the failure to break out, if this is the last and final push higher, the failure right here to break out adds weight to the fact that we may be doing a triangle here. So this would be wave D, and then we would do wave E, back down toward this trend line, and that would complete all of the 5 waves of the contracting triangle. And then we would start the A, B, and C to complete minor wave 5 of intermediate wave 5, which this also completes primary wave C and cycle wave B, in our opinion, that we'll show on the long-term chart later. So this is how we're counting it. This is how we arrive at the diagonal. Now, some of the rules within this diagonal. One is wave 3 of a diagonal right here is always shorter than wave 1, and in this case it is. And some indexes, wave 3 is 0.618 of wave 1, which is a perfect calculation for wave 3 of a ending diagonal. And other indexes, it's 0.786, the length of wave 1, which 0.786 is just the square root of 0.618, another perfect calculation for wave 3. So what that tells us is wherever wave 5 starts from, whether it starts from here or whether it starts from here, or even if the E wave of another triangle develops right here and makes a low, then that's where it would start from. Wave 5 won't be as long as wave 3, because one of the rules of the ending diagonal is wave 3 is almost always shorter than wave 1, but it can't be the shortest of the 5 waves. That means wave 5 will be shorter than wave 3, so that gives us calculations and the ability to track where wave 5 goes to. So from here, if we're correct and if the ending diagonal continues and plays out, we should go back up here to the trend line, to the channel line. And we actually should spike above the channel line, because that's indicative of, that's also one of the rules of what an ending diagonal does. It finally reaches the channel line, it breaks above the channel line, the upper channel line, which Elliott called a throwover. And you can imagine psychologically what this does to the market. We've gone in a long drawn out wedge shape for months and months and months. The market finally gets up, breaks the channel line. You can imagine how many traders use that as a point that the next leg of the bull market would be starting. But understanding Elliott, this is not a continuing pattern, this is an ending pattern, hence the name ending diagonal. And an ending diagonal is just what it describes. It ends a rally or ends a bear market. And then what takes place from there, once the throwover happens, and we would expect the price to go above, maybe stay for a day or two, and then come back down, and it will come back down to the previous 4th wave, wherever that is, here or here, in real short order, a lot quicker than it took to go up. It'll be back to this area. Once it breaks through this area, the next target will be all the way back to where the diagonal started from, intermediate wave 4. And it will come back down. It's been 10 months now, and the diagonal is not complete yet. We still have another month possibly left to go. The market will come back down to where it started from in a third of the time that it went up. Another rule of an ending diagonal. And then once intermediate wave 4 is broken at some point in time, that will be confirmation that the entire rally from 2009 and 2011 is complete, and it'll be confirmation that our wave count is correct, and then back to the 2009 lows. So in summary, what we're doing right here is we're just watching 5 waves of wave C, and this is 1, 2, possibly wave 1 of 3 has started, and the market will work up in 5 impulse waves back to this high right here. The alternate is that this is just wave A, and we'll do wave B down and then wave C up. Another alternate is that this is part of a triangle, as wave 4, and we still have an E wave decline back down to this area here, but it can't violate any of these lows. At any point that happens, we would have to rethink this and possibly call this the top. However, like we say, this is clearly 3 waves down. There's nothing impulsive about any of this. It's all just a consolidation and a correction, and we can stick Elliott Wave labels on it. And so far, everything points that we still have a new high left to go. So be watching the BBM updates, short-term updates, the newsletters. We'll be tracking the intraday subwaves that will be forming to make the bigger picture complete. And we have a new YouTube channel for HFR Trader, and we'll be posting a lot of videos there, short-term videos, long-term, intermediate-term videos to help everybody. Videos will help everybody understand what's going on a whole lot better than just reading and looking at a chart. So, happy trading, and we'll be in touch.